To CTM. What's going on, everyone? I hope you're well and doing great. Here we are, broadcasting from Mexico City, Mexico. Wow, yesterday that crash, Javier is saying, you know what, Jord, that might have actually been, well, you guys are a little bit more technical than me. Javier, enormous shout out, the architect of V2, jumping in with a little troubleshooting. I'll go ahead and get to that and do check. I was looking yesterday also as far as mobile machines, laptops. This one here it's old now. It's got 16 gigs of RAM, and obviously I use all of that RAM. At home, 128 is comfortable. And then I was looking at Macs, whether it's a MacBook Pro or Air, and they only go as high as 32 gigs of RAM. Man, I'm not sure what to do about that, but we got to do something. Nevertheless, great to be here with you all. Got to make sure we show up regardless of the circumstances. We got to be able to adjust always to whatever is thrown out of us. All the love to all of you. Still looking bullish. What is the market telling us over here? And what's interesting is that the market started this recovery during New York, right? Lots of shakiness overnight after nice gains on both Friday and on Monday. Those gains coming largely off of Fed speakers saying, you know what? We came off a little bit too hawkish, and you know what? I think we're going to actually have to cut in December. And since then, the markets have repriced aggressively towards a cut indeed for the December 10th meeting. We still have, no doubt, the Fed Beige Book on November 28th. And then we still have some jobs data, not non-farm payroll, the first week of December ahead of the Fed. It doesn't look like there's anything that's going to change. This seems to be pretty much, let's say, assured that the Fed is looking for a 25 basis point cut. And then it looks like they'll do nothing in January. And then likely we'll see a cut in March. And then perhaps somewhere around June. And then then we'll be looking at and working towards the new Fed chairman. Right now they're floating the name. They're just floating the name. And that sometimes the Trump administration has done that as a way of like distraction. So who knows? I don't trust anyone. I don't believe anyone. It's the Bitcoiners in us. Don't trust, verify. Kevin Hassett is seen as the front runner. Markets didn't react to that news. They were already just recovering off of overnight shakes. That's what I felt it was like. It was like the market is definitely telling us a story, and part of that story is, well, there's still a lot of uncertainty going on, right? Then we had a lot of data this morning, and that data wasn't really that good. The jobs report that came in was actually very bad. Private sector jobs that were lost. We see that retail sales were bad, worse than expected. That's not good. Both those things are not good. And then we see obviously core PPI, coming off and a little bit benign. And I saw news I didn't see. I heard oil came off substantially on the news, that there potentially is a Band-Aid peace deal being arranged. I'm looking over here, and I pulled up this watch list for a moment just to look over at Google. And some of the news, or in the news today, is, well, two things. One is the TPU versus the GPU, and is this a blow to NVIDIA, and is Google going to go ahead and gain market share out of NVIDIA, and if it is, how much would it be? And is NVIDIA the AI bubble itself, or is that just one aspect of it? Google is not really, Google's positive on the day. It's not really doing anything of note. And then you see NVIDIA is off a few percent, right? So how related the news about Google's TPU efficiency is or isn't, I don't know. That definitely does not derail the whole AI build out that's to come. It enhances it in a way. Did you see David Sachs, right? Remember that he was, after OpenAI was like, oh, listen, we're going to need a federal backstop here. And he's like, that's not happening. There's not going to be any federal bailout. The U.S. has like 5 major frontier model companies, and if one fails, the others are going to pick up its place. What's neat is seeing not only Google entering into innovation when it comes to chips, but also obviously Tesla, or is it XAI, or it's so hard. Elon should have just one company. I really honestly. But anyway, now David Sachs is out there today though, and he's saying, well, you know what? According to the Wall Street Journal, that AI related investments account for half of GDP growth. Half. GDP currently expectations are 4.2% out of Atlanta Fed a few days ago. Half of that coming from AI growth. Well, that makes sense, right? I mean, these are real. These data centers are ginormous, and they obviously run on energy, and there's a lot of labor to build them. And then there's the hardware. Of course, it makes sense that GDP growth is coming heavily and so heavily into this area. He says a reversal of that growth, right? Remember we watched the CapEx spending as a canary? I don't even think that's a canary. That's like a full-on alarm. He's saying if we were to see a reversal, this would risk recession. As long as this AI race and boom continues, odds of recession are pretty low. Now, we understand and we know that there's a growing discrepancy between different segments of the population. And people are out there suffering. That's likely going to continue. I was having a conversation with someone last night that is completely not involved in finance, but very involved in the world. And we were talking about, as we often talk about together here, what is taking place. And, we could use like the next 5 years as a reference point. And we were talking about, how this advancement in automation, and we talked about, the coming of the humanoids and how the AI will be running them, and how useful a lot of those tools would be for a lot of people. But then we also talked about the jobs that are going to be lost and what that looks like. And I don't even want to go there today. My whole theory about, what that means, and it relates to the lockdown. Anyway, let's just keep it positive. David Sachs is saying that would risk recession, and we can't afford to go backwards. So is now the administration actually, even, behind private doors, contemplating actually backstopping these companies? It seems to be inevitable. We talk about Bitcoin and we talk about game theory. Is it in the AI portion of the world? Is it inevitable that eventually the government is going to wind up backstopping this great AI race? We'll find out. Love you being here. Thanks for being here. Anyone that is new, welcome. This is Jordan with Conquer Trading Investing, and this is CTM, the absolute best community. You are surrounded by giants. What? I don't think that's MacBook Pro. Oh, you know what? That's interesting. I'm in Mexico. I don't know if that's maybe I thought like I took off the Mexican region and was putting in a different one, and it wasn't coming. I'll take a look at that. That's a powerful machine you're talking right there. I don't know if maybe if we could do something like 64 just for the mobile will be great. NASDAQ 1.0. How's NASDAQ looking over here? So I like the story the market's telling, that let's go to a smaller time frame though, Ace. Let's start off of not my 1 minute. Let's go only 1 hour. Let's just take a look at what's going on over here. So Markets closed yesterday. Overnight scare. No, sorry, this is overnight session. Overnight drift off down. Then before the U.S. Open, a little bit of scare. Doesn't like the data. Markets under pressure is the narrative that it has to do with the TPUs over the GPUs. Market signaling. This is what the story that's being told right now. I don't think it's bad news is good news yet. I don't think that's the case. I think that there's no question that the market was very concerned once Powell said there will be no rate cut for you. Right over here is when Powell said there will be no rate cut for you. And then right down over here on Friday is when we're like, oh, we're just kidding. There's going to be a rate cut. So obviously, in this particular moment, looking just in front of us, the market is highly focused on a little bitty tiny 25 basis point rate cut. And it does seem like that's coming. The question is, what does the market do after that? Assuming that December 10th they cut 25 basis points, is that enough? Will the market be content? Will that be able to trigger in the Santa Claus rally? Will that be extended? Are we now going to be bouncing into that rate cut? And assuming the rate cut comes, does that trigger for the next week or 10 days a Santa Claus rally? Or does the market then say, okay, now it's actually going to be a few months before the next cut and start throwing a bit of a tantrum? That's the question. And right now the story being told is, okay, the data is not as important as what the Fed is going to do, right? Fed saying we're not cutting. Fed saying actually we're walking that back. We're going to cut. Market got a little bit shaky, was able to wash that off. It's very positive, right? I'm just trying to check out, Ace, what we see as far as like just playing around and seeing if we see anything, which I really don't, as far as 1.0 and up over there. Maybe I'm not seeing anything is that an important line of repair? That's the yellow line that we've been looking at from another vantage point. So yeah, breaking above that trend line, that's critical repair. That repairs the damage we did from the trend line breakdown. The first breakdown we've had since the new all-time high was made after the April correction. And just think about what the market's telling you. If technical breakdown, and if the market over a matter of days is able to recover, that's a strong sign. That's a pretty good sign. I don't like personally that it's coming off of focusing on so much on a 25 basis point cut. I don't really think that that's a big deal. The market seems to do, which is why I just worry, well, hey, what's going to happen if they get the cut, and then it's going to be a few more months into the next cut. That's a long time, 90 days. So that's what I'm kind of just, toying with. Bitcoin entry yesterday, 88, 150, and now well above any type of exit. It looks good, and everything here looks like right on time. We don't like that. Yeah, so we're dealing with, for sure, a RAM issue. I checked the internet connection, the speed. It's more than sufficient. It's ample, about as ample as the Federal Reserve's reserves. No, it is ample, and but it's a RAM issue, and I'm a RAM hog, and but I think we're a little bit better today than yesterday, and that's good. We're going to make it through into tomorrow's session, and then Thursday in the U.S. they're celebrating Thanksgiving. We won't have a session on Thursday, and then we'll be back at it on Friday, and then MicroStrategy still holding over here. Look at the deviations flatlining, which is just crazy. It's weird. It's not often that I've seen a deviation like that flatline. We're seeing still both the Cardano and Ethereum positions holding on. I wanted to take a look at them with you. Ethereum getting closer here to locking in, and then Cardano here also getting close to locking in a nice short side trade. So that's what we're watching. We're just throughout all of this hoopla, you know, we got ourselves on the sidelines, and then those that are trading the short side have just been poking, you know, or holding when it comes to MicroStrategy, and that's a great place to be. It's how quickly and how nimble we are able to react. I can't wait to the next time that we are fully positioned across Bitcoin and crypto and across stocks. And then, you know, we're getting a wave that's carrying. And then when we play that honeymoon in the morning, and then it just hits as we're roaring in the bliss. And look, I don't know when that's going to happen. And you don't know, and anyone doesn't know. But I know that we're going to be either safe, protected, and or capitalizing. Look, I am forward testing V4. I am not trading V4. I'm not here on this machine. I don't have it pulled up. I don't know, but on Friday we will cover specifically on V4 across Bitcoin, Ethereum, Cardano, and Solana, and how these last 2 weeks were navigated, and we'll look at it together. Ethereum, Bitcoin, I think I have right here. And I was looking at this yesterday, and as I was looking at it, I was like, it's not telling me anything. This is a 3-day chart over here. Maybe come down on a daily, and that there's a big wick over here. And I'm saying, do I go from the bodies? Do I go from the wicks? Do I go from these two wicks over here? I don't know if you could see that well on my screen. Could you see the wick here and a wick here? And we're coming into that resistance now, just to play around a little and just get a feel for what's going on. And that's doesn't seem to be any structure that I see. And then we just take it like this. If you were to go, see, there's a wick up here that misses. I love when I don't know, and that wick pierced above here. It didn't close above, so it's hard to say. Are you into that resistance right over here, which you might be, or are you looking at it touching these two wicks and still have a little room to go? I don't know. What do you think? I don't know exactly how I would look at that, and I don't really see. That's just a 1.0 line. We were able to, on the breakout, we had that breakout, retest, resum up, second retest, right? And then we were able to really run hard. If you were looking at that, you know, the first two break, there's the breakdown of the parabola, the retest of the parabola. It looks like that's retraced close to 50% of the way. And from a Fed cycle point of view, as the Fed does two things, and that's, don't forget, does anyone have the month that the Fed drastically reduced QT when they wound it down to just $5 billion a month? And I imagine does anyone know? It's somewhere over here that happened. And we look at that period when the Fed stops QT as when all of a sudden ETH is expected to outperform Bitcoin as far as the Fed cycle. And also the second thing we're looking for is when the balance sheet begins growing. And when both of those things happen, my expectation is that Ethereum is going to outperform. Now, that doesn't mean if there's a hiccup in between that, like now, This is, that you're not going to see Bitcoin gain against Ethereum, of course. But when you go from the point of when QT stops and balance sheet expansion starts, and then you fast forward to when they return to actual outright QE, the next big milestone in the Fed cycle, between those 2 points, Ethereum, I expect Ethereum to outperform. So this is a more favorable time. What about a line on the chart? April. Ace, thank you. So you have April, and then you could see that's right when, it wasn't stopped, but it was drastically wound down. And that's when Ethereum's been outperforming. So I wanted to take this and just take a look at it and see if this is doing anything. And I don't see it doing anything at all. So I was just curious. I could go ahead and just get rid of that. It's not doing anything. Yeah, so that's my expectations. And that I don't have a clear read on the chart. I would say that after the breakout, we've had about a 50% retrace, right? Is that like there was a touch, the resistance, you fell into there again? It seems like if you get a breakout, it's a good time to lean into Ethereum. But yeah, that's a good look. Just reading some of your comments over here. A bunch of you having trouble with the audio though. And by the way, I think Powell did, and I think I said this in real time, like as this was developing. I think he did an amazing job. The markets were running away, and he sincerely put them in check. Like he gave and it's so far nothing, right? The extent of it was 8.5 on the NASDAQ. He did a really good job, in my opinion, using that verbal intervention, and well played. And I'm just trying to think of how that relates to Bitcoin. Bitcoin was the ruler here, and Bitcoin, had Powell not, that might have been able to take it to new all-time highs. But Bitcoin was already into correction. A lot of people were looking for distribution. I think we did this, and correct me if I'm wrong, but I think of 18, we were like 88. I think we said that, something like that. So it was before then. Y'all were here. Y'all remember, and I'm just trying to do it as best as possible. OG said, well, if this is, then somewhere in this neighborhood. Sorry, just reading that we're crossing a higher low than April. I want to come back to this. Invoice. Whoa, hold on. Let's take a look at it all. Yeah, we're just gonna deal with it today and tomorrow. And we checked in. It's the best we could do with what we have. Tomorrow will be the same. We're gonna check in and give it everything we got. Just make sure that we're doing our reps until we get back on Friday and can really begin our work sessions together. A little bit, a couple of $1,000, a few $1,000 lower than anticipated. Is it anything more? Well, someone was saying a couple of thoughts that I was interested in. Creating a higher low than April. That would, and this still in play, right? So that's a good look. So I just want to touch on that briefly, okay? And maybe we can get rid of these arrows now. We don't really need that anymore. We are putting in so far a higher low. However, from my vantage point, it is also a lower low. Like, what are you talking about? So we have this structure, these lines, and I'm not at the liberty to really get into it right now with you all, but we did, put in the low here, and price made a higher low, no doubt. And you still have over here a high, a low, higher high, a lower low, higher high, and still a lower low. However, from my perspective and my TA, I would have liked to held here, right? And you can see this line. If you can't see this line, I'll make it a little brighter just so we're all looking at the same thing. This is the April low. We wanted to hold above it over here from a structural standpoint. That would have been healthy. This is shots fired. It's a warning of a breakdown of structure. So you are technically correct, and it's a good observation. We are currently so far still making a higher low. And by the way, if we talked about well ahead of time on the breakdown over here around 97 or 96, that, the possibility of a liquidity grab down over here is still something that could happen. And it's looking a little less likely now, but it's still a possibility. That actually would be quite healthy if it was just a liquidity grab and you saw an immediate recovery. That would have me okay. Then I would feel confident on a recovery that we just put a major low in. Still, from right now, we just took an aggressive type of repairs, and I'm like paused here. I have to pause you 1 second with the greatest. Oh gosh, I'm so sorry. With the greatest, it's a family emergency. With the greatest sincerity, thank you for understanding. I apologize because your time is precious to me, and I just want to say that it's a family emergency. Otherwise, I wouldn't do that. All right. Um, Reading your comments. 40% was more than expected, in so much as that I didn't think we would get a 40% drawdown. without getting a breakout to the upside. Not a euphoric breakdown, but a breakout to the upside. We've looked at that very clearly. And then a mean reversion would be a 40% drawdown. Yeah, without question. I don't think that we've cut and at the same time, if there's a 40 to 60% is, something that we set a guidelines as something would be obviously diminishing downside volatility. Look, if we're not into, the making new all-time highs in 2026, then that view is completely off and wrong. Even if it were to only be between a 40. Yeah, anyway, I think we're there. Well, that's one thing it's intentional. What do you think of if every time Eric Trump tweets something like super positive or bullish, there seems to be a really strong correction in markets? Is that some type of signaling that's going on to other players out there? I wonder. Thank you. Thank you, Benova. Thank you so much. For those that are especially Latin, I'm going to I'm going to the Basilica tonight, and always you all are in my thoughts and my prayers, and a heart for sure. But especially tonight. All right, everyone. Thanks for being here today. Thanks for making it through this session. We'll be back at it tomorrow. And until then, yeah, the April low is still for sure into play. But as far as losing steam here, and I'm not into the upper resistance, I felt good shaking it off. I think we're all right. They look like they're ready to break down over here. The 10-year. I don't know if that's the best chart to show y'all. And at the same time, right? It looks like a very clear consolidation taking place. Yeah, we're coming to a pivotal point. I think we're about to get a big move one way or the other on bonds. We're looking at the 10-year here. I haven't looked at the 2-year in a moment. We'll get back to that in a little bit. DXY, I don't think I have. Hold on, let me find it. You know what? We gotta go right here, right now. Maybe not. Sorry. Even better, this brings up two things I wanted to look at. So with the now expectations of a cut into December, we are coming in down to test the what would be a bearish continuation pattern triggering, and that would be good as far as a global liquidity standpoint. So that looks like that's in play as per expectations. We don't talk about it now, but around here we have that outside channel resistance. And then I just wanted to take a look with you right over here on the 10-year at this one, and why I don't know. The other one was more accurate. Let's get this accurate over here. That's a 3-day. So we're coming down hot. All right, y'all. I'll see you all tomorrow. God bless you, CTM, and I'll talk to you soon.